Hello everybody, welcome to WealthWindow. Today, we are going to discuss crypto investing for beginners and how you can start learning the basics of crypto. Be sure to stick around until the end of the video where I share my favorite platform for investing in cryptocurrencies. Now let's get into the video. To start the video, I want to quickly define what cryptocurrency is so that everyone viewing this video is on the same page as we forward. Cryptocurrency is simply a form of payment that can be used to make online purchases. Of course, in order to acquire cryptocurrency, you need to exchange real currency, whether that be US dollars or whatever currency that you use in your country. Now you might be thinking, well then, what's the point of trading my real currency for a currency that is technically not real? I will be answering that question as we go through this video, so be sure to stick around. Now, I do want to say that this is not financial advice. However, I am attempting to provide the necessary base knowledge that you can build upon as you begin to invest in cryptocurrencies. With that said, basically buying cryptocurrencies has much more risk than keeping your money in its current form. But the risk factor does not come without the possibility of insane growth that you just do not see in currency markets. So with that information, let us now explore the fundamental differences between cryptocurrencies and the stock market. The main difference between stocks and cryptocurrencies is volatility. Volatility is an extremely important term that I will go further into depth later in this video. But for now, what you need to know is that cryptocurrencies are far more volatile than stocks. In simple terms, this means that you can expect the price of cryptocurrencies to change quicker and much more drastically than stocks. Now, I want to make it clear that investing your money into anything, whether it's stocks, crypto, or a business, there is always going to be a degree of risk involved. Because of the volatile nature of crypto, I believe it is much easier to get started investing in stocks before jumping into crypto. Most trading and investing principles carry over from the stock market to crypto, but it is much easier to start practicing with smaller levels of volatility in the stock market. So now that we know what cryptocurrency is and how it differs from the stock market, let's briefly discuss some key terminology that you will constantly hear if you are getting into the crypto market. The first and probably most important crypto term to know is blockchain. Blockchain is a technology that stores all records of transactions over the internet. Blockchain removes the need for a third-party arbitrator for a secure transaction to process. The foundation of all cryptocurrencies is built on the blockchain technology. The next important term is hashing. Hashing is a way to verify that an amount of cryptocurrency belongs to a specific user. A hash is a string of characters that is connected to each and every block of cryptocurrency that exists in the world. So if I purchased any quantity of a cryptocurrency, then my blocks would have a hash that proves that I was the person who made the purchase. I do not want to throw too many key terms at you in this video, so I will only discuss one more term you should know, which is public key. When you hear the term public key, you should immediately think of a bank account. Your public key is the address of your crypto wallet, or the place that your cryptocurrency is stored. You will use your public key to provide authorization whenever you want to make a purchase. Think of your public key as your bank account number because they serve very similar purposes. Okay, now that we have some key terminology under our belt, let's get started on the fun part. What are the main cryptocurrencies out there? So to start our discussion of the main cryptocurrencies, we have to begin by discussing the coin that started it all, Bitcoin. If you have heard anything about crypto, I would bet that you have heard of Bitcoin. Bitcoin is decentralized and relies on the blockchain technology that we discussed earlier in order to keep track of all Bitcoin-related transactions that occur. Bitcoin is the most prevalent and valuable type of cryptocurrency. And while there are many differing opinions on Bitcoin, many notable people believe Bitcoin will take over as the main global currency of the future. If you hear the term altcoin, don't be confused. That simply means any cryptocurrency that is not Bitcoin. Some of the most popular altcoins are Ethereum, Litecoin, and Cardano. Out of all of these, Ethereum is the largest and most important altcoin. So how does Ethereum differ from Bitcoin? Well, Ethereum is also a decentralized currency that relies on blockchain. However, the main objectives of the two currencies are fundamentally different. The main objective for the future of Bitcoin is to overtake all the world's currencies and become established as the main global currency. Now, whether or not this is a true possibility, we will have to wait and see, but the possibilities with Ethereum are much different. Ethereum is a programmable currency, and because of that, it is technically more powerful than Bitcoin. To go even further, Ethereum doesn't have a quantifiable supply limit, and that is just another advantage that it has over Bitcoin. If you are interested in learning more about the possibilities in the future of the two crypto giants, there are plenty of websites out there that discuss in depth where Ethereum and Bitcoin can take our civilization. But for the sake of keeping this video somewhat short, I would like to move on and briefly cover Cardano and Litecoin. Litecoin is similar to Bitcoin in terms of the blockchain technology it uses, but Litecoin has a much smaller market cap. With that said, the main advantage of Litecoin is its cheap transaction fees and quick payments. Cardano is a relatively new currency and is very different from the other cryptocurrencies in terms of the problems it solves. The Cardano team believes that there will be a large number of currencies and not just one main currency of the future. Now that we have discussed the four main currencies, I implore you to do your own research and determine what you believe the future of crypto will look like. There are hundreds of other cryptocurrencies out there that emerge every day. The four we did discuss are the main currencies that you should know as you begin learning about crypto. Now that we have identified what crypto is and a few of the coins, it is crucial we begin to understand volatility and the risks specific to crypto. There are many reasons as to why investing in cryptocurrencies comes with more risk than stock market investing, but none more important than volatility. One reason for the increased volatility in crypto is the fact that it is not directly tethered to anything. The success of the US dollar is tethered to the success of the United States. No such relationship exists with crypto. Another reason is public reaction. Market sentiment leads to changes in every market, but none as severe as the cryptocurrency market. Public fear often can be generated by the release of one news article, and as a result, lead to the value of any cryptocurrency dropping hundreds of dollars in the span of a few minutes. To be successful at investing in cryptocurrencies, you need to be in for the long haul, and that comes with being prepared for immense volatility. Similar to stock investing, it is often best to set up recurring payments and not constantly check the value of your investments. If you are constantly checking the price of Bitcoin every day, it will be difficult for you to stay disciplined and not panic. Volatility may be the most important risk to crypto investing, but it is not the only risk. As we have discussed throughout the video, cryptocurrencies are unregulated, and while that can be seen as a positive, it also adds to the amount of risk involved. Because of the lack of government recognition and regulation, we just don't know what the future holds for crypto. And you have to decide that you are okay with that if you decide to invest. Another risk that you have to be aware of in crypto investing is the possibility of cyber theft. If the public key of your digital wallet is exposed, then all of the crypto you held can be stolen in an instant. The possibilities that the world of cryptocurrency brings to the world are amazing, but they do not come without risks. You will have to ultimately decide yourself whether you believe in crypto enough to risk your hard-earned money. Now that we have all this information in one place, and we have a base knowledge of information, we can get into my favorite platform that I use to invest in cryptocurrencies. There are a number of platforms that you can use to invest in crypto, and I have tried out quite a few of them, but my personal favorite that I use is Coinbase. Coinbase is a simple and secure way to invest and trade cryptocurrency. The user interface is extremely easy to use, and they have the largest selection of altcoin that you will find anywhere. Out of all the platforms I have used, Coinbase is by far the easiest to use. I would definitely recommend giving Coinbase a chance if you are looking for a safe and secure way to join the crypto craze. If you're interested in getting started investing in crypto with Coinbase, there will be a link below this video to go sign up. That will wrap up this video. Subscribe and turn on notifications so you don't miss more videos related to business, personal finance, and much more. Take care.